Welcome back. Welcome home, everyone. Hope you're having an excellent, wonderful day. We got a special guest here with us today, Sheriffa Parkinson from Canyon Mortgage. She's going to talk to us today about a special program that she offers because not all banks and brokers have the same program. This is important for us to know. So she's going to talk to us about a special one for our FHA folks. And Sheriffa, can you tell us a little bit more about yourself?
Yeah, sure. Thank you for having me here today, Justin. So my name is, again, Sheriffa Parkinson. I'm a loan officer with Canyon Mortgage for the past, let's say, 6-7 years. My primary focus is residential loan. So I do residential, I do reverse mortgages. I'm just tapping into commercial lately, but my main focus is residential. I'm licensed in New York, New Jersey, and Connecticut. My company is licensed in other states though, but my personal, areas are those three areas. So my job is really just to help people as much as I can. That's my embodiment. Try to see how much I can help someone to own a piece of land, own a piece of property, have something for themselves, and that gives me for me to wake up in the morning and smile, knowing that my job is offering that for someone else out there, some joy to own a property.
Beautiful, beautiful. See, I didn't want to say too much because Sheriffa was gonna, give herself to you all anyway, so you can see what I'm talking about. You see how she said help? She wants to help. Come on now. Come on. Anyway, now you were talking about this FHA program. This is talking about like a FHA loan where no credit score is required. Can you tell us more about that? Because that's blowing my mind.
Yeah, sure. So we have a program under FHA. It's also under conventional as well, but let me focus on FHA first. So with the FHA program, it is easy for you to be qualified under this program because you don't have much debt. So this is for someone that has no credit score regardless. No credit score doesn't mean that you have bad credit. So I want to make it very clear. People believe that, okay, no credit score means that I probably can qualify with a 400 credit score, 500. No, this means that you absolutely have no trade lines. Like people, for example, who are just coming into the country, who have not established credit yet. This might be a person I'm talking to, or maybe you're that you don't want to use credit to buy anything. You want to use cash, so you don't have no credit card. So that I'm talking to you as well. So with this, you have no credit score, but you are working and you want to buy a property, then this is a perfect plan for you, right? So there are a few things that we'll look on to see how qualified you are. The first thing is that we'll look on your verification of rent. So we want to see if you're renting somewhere for the past 12 months, if you're able to supply us with 12 canceled checks to show that you are paying your rent on time. Because now we're trying to build credit for you. So I need to get at least 3 trade lines for you. So one of them will be the rent, you're paying rent, right? If you're not paying rent, then we'll ask you to send us a letter from a family member that you're living with to say that you're not paying rent, right? That can also use as well. So that's one. The second thing is that we need to look on a history of you making payments. Maybe it could be like your utility bill for the past 12 months. It could be you're paying maybe Netflix or Hulu or your car insurance. So once we can prove that you're paying these things for 12 months from your checking account, we will add these on your credit as a trade line. So in essence, we want to make sure that we have 3 trade lines for you. So we'll build your credit in the meantime. And we can use these things to be able to assist you. Now, like a regular FHA program, we qualify you based on your front and back ratio, right? That's all programs. But typically with the FHA loan, if you do have credit, your front will be like a 46% over 56.9%. Front meaning that that is your mortgage payment over your gross net income. And then you have your back ratio, which is going to be your mortgage plus your monthly payment on your credit over your gross income, right? So with this program, where is no credit, your front is going to be a 31 and your back is a 43. So that means that you'll be qualified for a little bit less compared to someone who had credit. Okay. So not to say that you won't qualify for something, just that your pre-approval won't be as high as someone who have a score, right? So it's 31 over 43, and that's the max that they'll go with the ratio for FHA, and it cannot be exceeded no matter what, right? So if you're able to put 3.5% down, and your ratio is that, then you're good to go. Okay. In addition to that, they want to see that you have at least 1 month's reserve in your bank account. And reserve is just the mortgage payment. So let's say a mortgage payment for the month is like 3,000. They want to see you have 3,000 in your account for reserve. That cannot be a gift. It has to be your own funds.
Okay.
All right. So unlike FHA where you have credit, everything can be gifted to you. Down payment, closing costs can be gifted to you. You're not required to have reserves on these programs unless you're buying like a 3 to 4 family. With this one, they do require you to have 1 month reserve.
Okay, gotcha. All right. So that sounds interesting. So I'm coming in, I have my income, I don't have any credit, but you're going to build the trade lines for me based off like
Right.
rent. Now, one question about the rent part, because I know you had mentioned we could do canceled checks of 12 months, or we could have a family member giving us a letter. What happens if we have a landlord, but we've been paying them cash? Can we do something with
Right. So with that, we there's a form that we have to complete, the verification of rent. So if you have like your management company be able to fill that out for you, I don't think they will accept they might accept it because in every situation there are other lenders that might allow you to have your landlord fill it out, and then we try to do a credit supplement to add it on the credit. So there might be a way to do it, but ideally if you are with a management company, they can fill out the form for us and then we can have that as well. But the only way that that will work as a trade line is if we can prove that you're making rent. But in addition, if you're not able to prove it, we will accept the fact that you're not paying rent from a family member as well.
Okay, gotcha. All right, so,
Yeah.
So we got our income. We're gonna get trade lines built for us just based off what we're paying already, which it blows my mind that is not included in credit already, but that's a whole nother conversation.
Yes, it's sometimes normally when you pay your car insurance, that's not on your credit report, right? That's not shown on there. If you're paying your Netflix account, you're not going to see that really from on your credit report. You know what I'm saying? Like, so those things, I don't see it when I pull someone's credit. I'm not seeing Netflix on on their credit report.
Could Netflix be a trade line?
Yes, I'm trying to say. Once you can prove that you're making the payment from your checking account for 12 months, we can use that. Check Netflix, Hulu, your car insurance. These things won't be on your credit, so we will add them on for you to show that you have these 3 trade lines, and then we'll be able to get the deal for you. So there is this is the FHA portion of it. You can also go conventional as well.
Yeah.
With the conventional, they also need to see the history, which I mentioned before with the FHA. But instead of you putting 3.5% down, you will put 5% down for the conventional. And this has been around for a while. It's not like it's a new thing. It's just that other people are not aware of it. And people might shy away from it as well because they're not qualified for as much. Because if you're buying something, let's say in Queens, for example, where the price is like 600, 650 and over, it's going to be difficult for your detail to be a 31 over a 43 to qualify, unless you're making a lot of money, like really, it's a different situation. But in essence, people might shy away because they might not be able to qualify. With the conventional, one thing to note is that they will use for pricing for the interest rate. If you have no score, they will use a 620 credit score to qualify you if you have no credit.
Wait, so for the conventional, if you have no traditional credit line, you're going to be doing what exactly? How does the 620?
So for pricing, so we need to know what the interest rate going to be for the program. So what they will do to give you pricing is assume that you are like a 620. So you get pricing as someone who has a 620 credit score if you have no credit.
Now that's for conventional or both?
Yeah, for conventional. Conventional.
And what about the FHA side?
For the FHA, they're going to do their pricing. They will select in their system no credit score, and then they will do pricing. The pricing is going to be not the best, you can understand, because you have no credit. But it depends on whatever the lender that you go into. They will do their specific pricing for that type of program.
Okay, gotcha. All right, that's for me. You know what? And the funny thing is, the reason I mentioned this is when my wife and I were buying our house. This was 8 years ago now. I didn't have any open trade lines. So one of the
Yes.
things the lender told me to do was, hey, go get an authorized user on your wife's Victoria's, whatever car she was using, I don't know, and then go get some trade lines and come back to us.
Right.
But you're telling me and us, hey, it might have been potential because I did have bills in my name that I could have, maybe we could have qualified this route.
You could go on that route. Would you have qualified for what you qualified for? I'm not sure.
No,
Because as I said, the detail is going to be less.
We would have qualified for
Say
less. We would have qualified for less, but we were so far under our maximum pre-approval.
You're already under. Okay,
Anyway.
gotcha. Yeah. So it's an option, but as I said, not all lender offer this program. So maybe whoever you went to at the time did not offer that program. So it's good for you to shop around. And if you have clients out there who's, listen, I have no credit. Listen, I don't like using my credit card. I just pay cash for everything. But I want to buy something. Don't just assume that they're not going to be qualified. Let them speak to someone who will be able to assist them, because you never know. There are programs out there for trying to have programs. Because it's a hard time right now. People are trying to buy something and they're qualified. So we're trying to see how we can tweak things that assist clients as much as we can with these programs.
100%. All right, this sounds great. I'm glad to hear this, glad to share it. And anything else that we should know about this program, know about you, or just the financing world in general?
Well, about this program is pretty much, I already said all that I could on the program. I just want to note to people, if you decide to co-sign with someone, and the reason why I'm bringing up this point is because I've seen a lot of time where people have had family members or friends co-sign with them on programs because they can't qualify, and then when they're ready to refinance or do something else, it's going to be an issue. So just make sure that when you're doing a refinance or buying a property, whatever the case may be, and you're going to get someone to co-sign with you, make sure someone that you trust, because a lot of times I'm seeing where people who co-sign with them are asking them back for money, or they need something from the transaction, and people are getting frustrated. So I always tell my clients, if for example, you cannot qualify for a loan, maybe you should try to buy something cheaper if you can, or find someone who you can really, really trust, because that is very important. Don't just put anyone that, on your application because you want to buy a specific property. And that's one. The next thing that I realize happening right now is for people who are buying multifamily. So they buy multifamily with this thought process that the tenant will be paying the mortgage. And then what happens is that when the tenant is no longer there, they're stuck with this payment and they can't manage it. So I always tell my client that make sure when you're buying a multifamily, make sure that this payment is something you can deal with on your own. So these are things that on a property, try to put in your mind frame. Don't co-sign with anyone, right? If you're buying a property, don't dump large cash deposits in your account, that can't be verified when you sign contract. And for multifamily, make sure that the payment that you get, you can manage it on your own. All right, that's pretty much my little two-piece.
All right, that sounds good. All right, well, Sheriffa, thank you for joining us. Truly appreciate it. Again, folks, if you need mortgage assistance, you're looking to get financing, like she said, residential and commercial. So don't sleep on either category. Come talk to Sheriffa. We got her information down below. You can also check out the next video on mortgage tips. I don't know, maybe it'll be about SUSU, down payment, something. I don't know what it's going to be about. You can check that out. And there's also a link to a free home buying guide so you can get started with your home buying journey. Of course, any questions, reach out to either one of us. We are excited to help you as always.
Thank you, Justin.
All right. Thank you, boss. Talk to you later.
Okay, bye.